Okay, good afternoon and good morning to everyone on the call today. Thank you so much for joining us. My name is Michael and I'm the Secretary of the South African Chamber of Commerce. And today I'm joined by Shiven Moodley and Mr. L. Lee. We got a action-packed itinerary for us to run through today, everything about cross-border payments and treasury management, technology, and I really hope that everyone on the call today is going to walk away with some new knowledge and potential expertise. So the South African Chamber of Commerce, we've been around now, this is our 4th year, and what we aim to do is to basically stimulate trade and industry between the continents of Africa and Southeast Asia, using South Africa and Singapore as our ports. South Africa and Singapore have actually got quite a lot in common. We are the gateway to Africa in South Africa, and Singapore is the gateway to Asia. South Africa's infrastructure from a banking and regulatory environment is probably one of the best in Africa, and it enables us to be able to be the regional hub for the rest of Africa. So you'll see a lot of multinationals setting up in South Africa and doing business throughout the continent. Very similar, you see the same thing in Singapore. We have a lot of Asia-Pacific businesses and multinationals situated here in Singapore. So hence, we have an interest in building these ties. So without further ado, let's get into today's topic and introduce our fantastic speakers. So we are going to be discussing essentially how global payments are transforming and basically discussing blockchain technologies' influence on this. So to start, let's talk about Mr. L. Lee, who's with us today. L is actually right now not in Singapore, he's in Laos on a project development over there, and he's made the time to join us today, so thank you, L. L is a serial entrepreneur, and he's co-founded 2 successful businesses in Singapore. His current business that he is running is called DTCPA. And essentially what Al is renowned for is fintech in the business space. He is a former banker from CIMB Group and JP Morgan, but he has also won numerous awards at the Singapore FinTech Festival. And he's in the top 10 for the FinTech Leaders Awards of 2022. So in the Singapore FinTech space, he is definitely someone. He's been interviewed on Money FM. So if you've ever been in a taxi and you hear them talking about money talks and they feature prominent speakers, Al was one of them. So Al, thank you very much for your time. Thank you for joining us here today. Followed by Al, we're joined by Shiven Moodley. And Shiven is the Chief Operating Officer and Macro Strategist of 88, stationed out of South Africa and joining us on the call today, looking a little bit cold over there. He's from a traditional treasury background, and he has got experience in alternative investment management. And basically, he has got a lot of experience in the Middle East and Africa environment, and his knowledge in cryptocurrency and macro economics is really going to illuminate us here today. Well, we hope so. Hey, Shiven. So guys, obviously I've introduced you very briefly there. Al, would you like to kind of just come on and talk a little bit more about your background and experience and some of the great things you've achieved in this space in Singapore?
Thanks, Michael. And everybody, good morning, good afternoon, wherever you are. I'm currently in Laos, working on a potential blockchain project over here. It's really exciting. Just to catch up with everybody on what's going on and what I've done so far. Michael, it's right to say that I've won a few awards. I think that's all really attributed to Singapore and the fintech economy and group over there. They've been extremely supportive. And essentially, we've done a few things for the market in the last few years. Which we've seen in 2017, the retail sort of boom in the cryptocurrency or blockchain space, followed by a market crash. In the wake of that, we realized that we needed institutions to come into the market, right? Institutions, for example, the likes of Fidelity, right, which is really in with your custody service, the likes of banks, DBS, right, to come into the space and be a custodian and a broker as well. So to usher in that era, we introduced Singapore's first pure play digital asset custodian known as on-chain custodian back then to help bring in institutional money into the space to stabilize the whole market. We've done that with certain success. And then later on, we realized that there is a need to allow people and institutions to be able to spend their wealth in the crypto space, blockchain space as well, which is why we created a company that deals with digital asset payments, right? So it's really about holding and protecting the wealth, spending the wealth. And in this part of spending crypto asset, we realize in a bigger picture, nation-to-nation settlement needs to be improved, especially cross-border settlement and transactions. That is why I think the key topic today, it's about nation-to-nation settlement across blockchain, cross-border transaction. How does that become more efficient with blockchain-enabled solutions such as cryptocurrency or CBDC and different type of payment tokens? So essentially, I think today's topic will help people to understand better what are the essentials about CBDC, cryptocurrency, and how that ties in with global payment system. Back to you, Michael.
Thank you, El. And before we get into Shiven giving us a bit more on his background, El, could you tell us a bit more about DTC Pay and when you set it up initially?
Very happy to. So DTC Pay, it's a licensed payments company in Singapore by the MAS. It is structured to be a payments company to do payments collection for merchants. It is also an enabler for the swapping of fiat to cryptocurrency and fiat money for clients as well. So that's essentially what I spoke about earlier on, moving from the custodizing of asset and digital payment token into being able to spend those digital payment tokens. So that's essentially what the company does.
Fantastic. It sounds like a very exciting space to be in. So Shiven, crossing over to you, could you give us a little bit more of your background and the work that you're doing at 88 and previously ELA Asset Management?
Yeah, I think I'm just going to have my camera off with the delay between video and sound on my end. Struggles of load shedding, I guess. But yeah, so previously known as ELA Asset Management, we were a traditional asset manager moving slowly into the fintech industry. Currently, we rebranded as 88, and as 88, we sort of transitioned a lot of our fintech products into a sort of a holistic solution in which we look at tokenization of property, tokenization of assets, but also the transactional aspect of stable coins, as Al mentioned in Singapore. The custody solution, we've currently sort of migrated into the custody solution space, offering that to both institutional and retail investors. Yeah, so that's been a bit about the company journey. Over on my journey, traditionally a treasurer, worked with some really amazing companies over the years, and transitioned into alternative investment and fintech industry. I think it was the next 5 years and the next 10-year growth aspect, particularly in the payments sector. And that's where I find myself currently.
Brilliant. Thanks, guys. Thanks so much for sharing. So I think I'd like to open today for the benefit of our viewers to really just talk about things in a high-level, simple point of view. And just to really start, could you tell us what exactly is a CBDC and how does it work? What do you perceive are the benefits? Can we start with you, El?
Definitely. CBDC is an interesting topic. It came out a couple of years ago. And essentially, the background is really about moving a country's fiat currency online into a digital format. Now, I think there are always some confusions about the word CBDC. Is it related to blockchain as an issue in decentralized format and being circulated worldwide? Just to clarify, CBDC, which stands for Central Bank Digital Currency, need not be on a blockchain. It could be a centralized solution, just no different from what you see as e-money these days, circulated by a nation or backed by a country's sovereignties, right? That's the first key thing that everybody on the call must understand. A CBDC does not mean it's a stable coin on blockchain. So unlike cryptocurrencies such as Bitcoin, Ethereum, which works on a public blockchain, CBDC could essentially be centralized solution backed by the government, just as a form of legal tender. Right? That's the key thing about CBDC. The benefits of having CBDC is essentially to move fiat currency online. It allows us to deal with everyday transaction, instead of using physical cash or electronic type of payment, but as a centralized solution to be much faster and effectively effect cross-border transaction and settlement as well from country to country. I think the introduction of CBDC essentially aims to increase or improve financial inclusion, allow for faster, efficient cross-border payments, and encourage more transparency. I think those are the key elements of why CBDC would be or has been introduced in different countries. The other thing is also to mitigate, the rise of or risks associated with cryptocurrency being more pervasive in respective countries, right? Because without a more efficient form of fiat money to go around, e-money to go around, then naturally your money changer, your distributors, your businesses would turn to cryptocurrency, right? Which sometimes for government, it actually introduces risk to the financial system, right? It also includes activities that are hard to trace. That's what I think most government would sort of frown upon. So I think those are the few key benefits to both parties, the users and the government backing that CBDC. So with regards to CBDC, I think it's going to be an ongoing topic, but welcome any question on this call.
Brilliant. Shiven, do you have anything you'd like to add in terms of kind of how a CBDC works and what the perceived benefits are?
Yeah, I mean, Al covered a lot of the broad aspect of CBDC, and what we're seeing is that transition from central bankers, particularly, to look at the space to identify, where's the world going and what are the perceived risks of stablecoins taking over the anonymity of the markets as a whole. So yeah, I mean, I'll cover that in sort of an overall aspect. From a South African perspective and looking at it from there is how our economy is evolving, but also what technology is evolving in different aspects. And, with looking at a Gini coefficient, we have a very high inequality aspect. So particularly certain countries with a low Gini coefficient from an economist's point of view would more look at more sustainable CBDCs, particularly transacting and allowing. A good example is when the checks were distributed during the COVID period. That's a very good practical example of CBDCs that could have been used in that aspect as well.
And yeah, again, that kind of speaks to what Al was saying about financial inclusion and these kind of tools being utilized for the benefit of the masses. It's not just going to be for a select few. This is kind of something that will be implemented for everyone. And, when you do see financial inclusion widespread, that's when you see economic growth and development. And simply, if this can ease transactions cross-border, you will see it will ease business and you'll see it will ease trade flow, and hopefully ultimately economic growth will stem from that. So it definitely does sound like it has quite a lot of benefits available to us there. So I guess, Ed, on that basis, could you kind of elaborate more about how a CBDC would differ from traditional money sources and what the potential benefits can come, from the implementation of this away from traditional money sources?
Let me kick that off. I think one of the key things I mentioned earlier on is the fact that CBDC does not need to exist on blockchain, right? It's just electronic form of fiat money. And it's issued by the central bank, regulated by the government, no different, subjected to the sovereign risks. Those are the essential key elements of the CBDC, right? So to put. Now, I think versus traditional fiat money, it always exists in cash or hard, notes kind of format, which is what the difference between the CBDC and fiat money is essentially. Now, the other thing is also the infrastructure needed to sort of manage both types of currency. Fiat money clearly has a lot more physical element. The minting and destruction process is very different. versus a CBDC, which likely utilizes DLT technology, which is a lot easier to sort of mint, circulate, as well as what we call burn, right, or destroy. So those are, I think, the key differences between in terms of operational wise, right? This results in, of course, various stuff, higher transparency, cost saving in terms of managing this type of currency. And of course, circulation is made much easier and settlement becomes sort of almost immediate. Right? I think those are the key benefits of having the CBDC over traditional fiat money. The other things that people don't talk about a lot, it's programmability. So with traditional fiat money being sent over even digital format over the SWIFT system, or in Singapore, for example, fast network, it actually lacks what we call programmability. So that is one essential thing that CBDC brings about, right? To be programmable as a digital format money. It could interact with smart contract. It could be written with rule-based condition. So that is a huge advantage that CBDC has. So take, for example, a loan could be written into a contract, right? And when you're supposed to pay, you immediately pay. So therein lies the lower sort of risk expected from a lender, and thus increases the efficiency, cuts out middlemen. So those are all potential effects of having the CBDC around with its programmability.
Brilliant. And I mean, that would solve a lot of problems. I can imagine also some of the problems that we face with physical money is if it gets stolen, it's very hard to recover physicals. But I could imagine something that is of this nature, of a digital currency nature, you would be able to kind of trace where it went, and it would be very hard to steal, which would also encourage lending from you know, as you've mentioned. So and Shiven, if we bring this across to you, you know, how would a CBDC differ from traditional money sources in South Africa, and kind of what would the potential benefits be to the implementation of this in South Africa specifically?
So that's a very good question. And, you know, we're seeing this sort of, how should I say, FOMO by central bankers into the market of CBDCs, with different central banks doing research, doing proof of concepts. And that's a really interesting aspect that's coming into the market. I mean, there are significant risks, but what's really interesting is on a settlement basis, going back to Al's answer, with the settlement network, there's no sort of one main settlement network on the blockchain. And what's really interesting is that's where the Reserve Bank in South Africa is actually looking at, okay, what can we do? And this is the project with the MAS as well as the Malaysian Central Bank, is to look at, you know what, can we settle more timely with more transparency across multiple banks, but also looking at within the tokenization aspect of South Africa, the interoperability between multiple banks in South Africa to move assets, but also to pay in a much more streamlined aspect. Not saying the legacy system that currently exists is outdated. I think it'll just be an add-on to the transition into this new technology environment.
Absolutely. And I mean, that kind of brings us to the next question quite comfortably. Staying with South Africa, recently South Africa went through a transition and they've been grey listed. I guess, Shiven, could you elaborate how this has affected Treasury services and cross-border transactions after grey listing? And also, you know, as we discuss CBDC, how do you see that the implementation of this technology could alleviate kind of the reporting and the transactions on foreign investments allowance and, you know, all of that for individuals and businesses in South Africa?
Yeah, I mean, what's really interesting currently is with the grey listing, even though we've had these written down in paper sort of protocols that were in place, we weren't really formally implementing them on a larger scale or as aggressively as we should. And I think that's what really turned us to the grey listing aspect. The blockchain, and if we look down the line, say 5 to 10 years, when CBDC does become sort of more an interchangeable word for stable coins or for this technology of settlement, to say that, you know what, there's more transparency in the transaction process from the moment of money being moved from one bank to the next and the visibility abroad. I think that's where cash, and particularly the FX transactions across payments, and the fundamental aspect of KYC and knowing who's that ultimate beneficial owner of those funds is something that all central banks are actually looking at with a fine-tooth comb, particularly with regulation coming in, such as MiCA in the European Union, and Binance really coming under a sort of a microscope from the Fed, but also from, I think, Belgium recently, earlier this week. So those are some aspects that we would have to look at from a central bank point of view. But yeah, it's actually a really interesting landscape that, you know, KYC can be transmitted across banks on a larger scale and more efficiently, which what we would look for from CBDCs.
And I mean, again, going back to what I said earlier with versus traditional money sources, when I asked Ed that question, and basically you want to be able to track the money, trace the money, see where it's going, have that visibility. It's going to obviously be very useful to regulators, to bankers, to, you know, and we'll get to this question later. But for me, at the outset, just hearing all of this and trying to understand it, with great power comes great responsibility, and, you know, entrusting central banks with that sort of information could lead to potential privacy issues. And we'll be, you know, anyway, we'll get to the question about privacy and regulation legislation in just a bit. But before we do, let's shift the focus from South Africa over to Singapore. And Ed, if I could talk to you a little bit about your experience in, you know, the stance of the MAS when it comes to cross-border technology and payments technology.
Let me pick up from there. I think the question is actually Michael was about what MAS stance is with regards to say CBDC and maybe cross-border payments, right? Michael just dropped off?
I don't think so. I'm still here. Can you hear me?
Okay. Yeah. Sorry, I think broke up for me for a while. Yeah. So I think from the MAS perspective, I think they have been exploring CBDC for quite a while. In fact, if you look at since 2017, they have been looking at that with Project Dunbar all the way up to last year, where I was partly involved in Project Orchid, which is more of a related to retail type of expenditure and NFT related payment. So over the years, I think MAS has always been exploring. Their approach has largely been for business-to-business settlement, less on the retail side until last year, where news was surfaced that they're actually looking at RCBDC and invited proposals from across the world to sort of speak about RCBDC. So I think that has been the stance, which is a very welcoming, looking at how potentially the technology can be used to enable for more efficient settlement. Without going, you know, in circles talking about their CBDC approach and all the plans that they have, I think what is the latest is that the MAS itself would clearly have been looking at different types of CBDC settlement and cross-border payments. I think the banks have been involved, including the likes of DBS and as well as JP Morgan, to sort of test out settlement in terms of CBDC currencies. So that is where things are in Singapore. As a whole, it's very welcoming. They have been looking at different types of solutions. And if you are available in November, I would welcome and ask people to sort of drop by in Singapore. There's always a Singapore FinTech Festival. Each year, MAS would showcase the latest update and developments with regards to CBDC during the festival.
Brilliant. And hopefully we'll also see you win another award, which would be nice to see, and we'll be there to give you a round of applause. So I guess that brings me to my next question, really. How is Singapore innovating cross-border payments by utilizing CBDC and stablecoin? What are some of the trends that you've seen, perhaps on a high level over the last few years?
Yeah, let me quickly speak on that. I think Shiven can also add from the South African perspective how that has been enabled. So in Singapore, there isn't a initiative to sort of bring the whole country into a CBDC settlement yet. It's mainly tested between FIs, sort of banks to say, for settlement between entities as well as cross-border settlement. Now, on the ground, that's where sort of my business and the payment space of stablecoin has been interesting. Right? We've been pushing out settlement of payments to merchant via stablecoin, which has really taken off in the last year. So essentially, merchants in Singapore right now, if you walk out with certain merchants, especially car dealers, yacht dealers, hair salon, luxury boutique salons, they are actually accepting cryptocurrency or digital payment tokens over the counter. So they would have a POS machine, the ones that you see, you scan your Visa, Master, Amex card. Those are actually enabled to receive cryptocurrency today. I think the key difference with those kind of solution in the market right now, it's versus solution pushed out in 2017, 2019, which we have seen in Singapore, which we've seen in Europe. This is effectively, these are licensed solution, which means they have a longevity and is recognized and understood by the regulators that they're in play. Whereas back in 2017 and 19, people were creating POS machine, totally unlicensed, and any settlement over those machine, anyone doing business, you know that the biggest settlement risk is actually your payment rate does not pay to you, right? And that happened, and that could happen. Whereas with a licensed entity, the risk is much more lower or effectively mitigated because the licensed entity has to prove that they have the funds and they have the proper operation in place to make sure that the funds are safeguarded. So I think with that, any businessman, woman on the call can actually start to dwell and look into the potential of accepting cryptocurrency as a form of payment, both for online e-commerce and in-store in retail space as well. I think that will really change. As for the benefits, the rates and all that, they're definitely beneficial and much better than the card scheme. As for the details, I think that you could search it out or we can have separate discussion. So back to you, Michael.
No, brilliant. And everyone, as we are progressing through our conversation here with Shiven and Al, please do pop any questions that you have on this topic into our chat. If you have anything specific on, that you would like to bring to the table, even separate from cross-border payments and perhaps maybe more into the space of trade finance and the future of that, utilizing this sort of technology, please do put it in the chat. And we'll be able to ask that to our experts here today. So that moves us on quite nicely into something Ed mentioned earlier, Project Dunbar. Shiven, could you give us a little bit more information on real life projects that have been undertaken in this space, like Project Dunbar and the others that you mentioned perhaps in Malaysia?
Project Dunbar was sort of the foundational project between the Reserve Bank, the MAS, Malaysian central bank as well, in which they were looking at the settlement aspect of having one consolidated platform for central banks to settle. So that was sort of the initial project, which was very successful. And then what we now know as Project Coca, and that has this Project Coca is on the second phase by the Reserve Bank, or South African Reserve Bank, which has been looking at sort of tokenization in the financial markets aspect. And that's been really interesting because they did their first sale I think it was a few months ago, with the SARB debentures between banks and settling, using sort of the main banks settling those debentures. So that was really an interesting aspect of using tokenization in the fundamental aspect by the Reserve Bank, and adding on to Al's CBDCs, but stable coins. What we're seeing is a huge shift over the last 18 months by Visa and MasterCard, particularly in their accelerator programs, into Africa venture capital businesses, and also fintech companies, in order of streamlining this cross-border payment solution, in which fintechs across Africa are allowed to use this blockchain technology to settle sort of stable coins where liquidity for a particular currency has been very tough. So fundamentally, a lot of projects or fundamental projects have been in place. And I mean, there's consistently testing in Project Coca as well as the Reserve Bank's sandbox. If you have a project, you can also have the ability to test in their sandbox, apply to test in their sandbox. Where 88 is sort of experimenting currently is the tokenization of assets, particularly property shares through SPV structures, as well as NFT reward memberships in the aspect of tourism and hospitality. We've seen a larger shift from the smaller hotel chains as well as large hotel chains in order to support a new generation, particularly that are staying at these hotels. And we're sort of supporting that nature of allowing SMEs as well as hotels in the tourism industry to piggyback off our infrastructure, allowing us to prototype this new technology and the availability of this new technology to their client base. So yeah, back to you, Michael. That is where we currently are, and I think there's a great shift in technology that we can really take advantage of from a South African standpoint as well.
Very, very interesting that you mentioned how it could be utilized in the African countries where perhaps there isn't liquidity in their own fiat currency. A payment technology that was utilized in Africa over the last, I would say, 15 to 20 years before blockchain was e-Pesa. And e-Pesa was a hell of an innovation where they used text messages and text message technology, SMSs, in order to exchange payments between vendors on the street. And this was something that you would see that initially the uptake was low, as there was not much trust or understanding in the technology. But over the years, when the business vendors in those particular regions that were utilizing this technology got to use it, and they saw the benefit and they told their friends, it skyrocketed. And that was one of the most successful payment technology platforms that was ever utilized in Africa, or at least in the last 2 decades. And this sounds like it has the potential to do something similar, but I personally think that a risk to the uptake of this is simply demystifying what it is. How does it work? How do you get real money back? Because to the man on the street that is selling fruits and vegetables, that is going to be receiving payments, or a hairdresser, as Al was saying, here in Singapore, people are savvy, they understand technology and digital payments, and they have various ways that you can pay for anything. If you go to a store in Singapore and you want to pay, the teller at whatever kind of shop you're at is going to ask you, do you want Nets, Pay Now, Visa, Amex? He'll give you 5 different payment options, Grab Pay, because it's a technology enabled area. But I believe in Africa and in the areas where, fiat currency might be limited in availability, the uptake might be a little bit harder. And that's where, talks like what we're having here today is so important in terms of bringing education to the masses and kind of illuminating on this topic, So great amounts of potential here. But as I mentioned earlier, one of the greatest risks that I'm hearing, or perceived risks, about this kind of oversight and the ability to trace payments, and it's all through the central bank, is privacy. So let's turn our attention into regulation, specifically around privacy, and how the regulators in Singapore and in South Africa are approaching this issue. Al, could we start with Singapore?
Yeah, definitely. In terms of regulation, it has been an ongoing item. And just to give a quick updated landscape, it's really different regulators trying to play catch up, right? In the early days, of course, we've seen MAS came up with the Regulation of Payment Services Act since 2019, enacted that in 2020, and then has been issuing license to licensed players in Singapore over the years, right? With the advent of Hong Kong trying to push out its own crypto-related BASP regulations, that has also sped up license granting in Singapore as well. We've seen Whether necessary or not, it has anything to do with Hong Kong, that's up for debate. But essentially, what we've seen in Singapore is a very well-structured regime since 2020, where it talks about what the practitioner or the companies have to deal with, right, from all areas of ensuring good KYC ML policy is in place, ensuring that clients' funds are safeguarded, ensuring that the operational process is actually safe and well reviewed. This is all gold standard, right? Just like how MAS has done it since the days of regulating SFA. I think this is just an extension of doing that as well. So this is Singapore as sort of putting out a very solid regime to sort of make companies deal with cryptocurrency as well as cross-border payment in a very proper regulated manner.
That makes complete sense. Shiven, what about South Africa and how they're approaching privacy?
So yeah, I mean, where it's really interesting is after the tokenization aspect of the debentures, what the SARB was testing was distributed ledger technology in the aspect of how should I say, central bank digital currencies and their risks. So there were some key takeaways from that, in which the privacy aspect was a very key element, and how we look at what are the fundamental information that are passed on from token to token on the blockchain, and how is it stored. And one of those key aspects that are currently being evaluated in these think tanks are, cybersecurity, which is a long-term trend that we're looking at. How is the vulnerability of these chains impacting sort of the retail customer, overall the operational risk as well. So meaning that if intermediaries are getting involved in this network of CBDC, how is that sort of impacting the minting and the burning, as Al mentioned? That's controlled solely by the central bank. But if there's any stablecoin transactions, how is this being visible? Because if we look at the banking system currently, and I take, for example, Canada, when Canada had their truckers' bank account suspended when they started striking, is this something in South Africa? And with control from political parties, would it be something that impacts our everyday customer? In the long run, no. The Constitution is there to protect us in these aspects, and where the evolution of legislation and the conversation comes about is talking about this openly, particularly the FSCA getting involved, legal bodies getting involved. I know Schindler's is one of the particular guys talking about tokenization of trust deeds within the communities, the rural communities, in sort of passing land from one owner to the next. So there's a lot of conversation around this. I think there's a lot of openness, but also privacy is the key aspect to show how much is someone willing to show from their token history. That's actually a really interesting concept that's coming out. But to add on to your previous conversation with Hello Pesa, what's recently come into South Africa was PayShop, because it's become such a popular way of the lower income to distribute and pay, particularly with the vendors. So banks have opened their network to a few banks, and PayShop has actually sort of taken off in the last few months. Yeah, back to you, Mikey.
I mean, it's a really interesting space, and as you were saying, Shiven, people having transaction history on the blockchain could be useful. Recently, South Africa made changes to their foreign investment allowance and the process for cross-border payments, treasury services for individuals to send money out of South Africa overseas to anywhere in the world. And some of the questions that they're now asking is kind of a complete offshore, the source of funds to get them offshore, how long they've been there. This technology could potentially help with that. Shiven, what are your thoughts and comments on the changes to the foreign investment allowance? And it's got a new name and process and all that now. Please share with us your experience in that so far.
Yeah, I mean, what's really interesting is, the changes to the everyday customer and how we show it to the customer. It's, what they're used to a set process, and we want to make it as easy for them to transition into this ecosystem, particularly on the traditional finance side. But where it's really interesting is a lot of these clients and corporates have these tax advisors that assist them on the process, and where we sort of walk them through is making sure that they're compliant and they're, it's as easy as possible for them, as previously they've remitted money. And, going back to the case of, the complications of how much of money has been abroad for a particular amount of time. And I go back to the aspect of on-chain analytics, and what's really, really awesome about that sort of aspect is when a token is minted or a token is held in a particular wallet or held in a particular asset, in the long run, if there's a wallet function on the other side that you're holding, that's, for example, a property, and that property was, in order to get your money into London, you used a wallet address. In this case, what's really open to the Reserve Bank and open to banks in the long term, with the adoption of stable coins as well as CBDCs, will be, you would be able to see that history, when how much of money was actually used out of that wallet, when was money received in that wallet for the longevity on the blockchain. And that'll be visible to particular banks, and obviously going back to privacy there, which would be really interesting. But going back to the traditional finance aspect and to the changes of Reserve Bank, as well as SARS. SARS has put in some really good protocols that I think that was much needed. And where we've seen the transition is the importer and exporter APN codes, allowing for more visibility in order to get us off that gray listing. So I think the important concepts are a lot of customers, particularly SME larger corporates, have adapted already because the APN codes were sort of implemented or not formally, sort of, I would say, informally implemented when notified last year. And a lot of those SMEs have become accustomed to that transition. So when you're fully regulated and going into this aspect of more stricter regulation by the end of the year. So I think where the central bank you over time, and as we start implementing right now, it's become more accustomed to your nature.
And look, you mentioned also the processes there that SARS is implementing. This has not really come as a surprise. Over the last 3 or 4 years, SARS has been making regulatory changes in terms of tax residency, global assets, the reporting thereof, the requirements, and this is just the next step in that. And it's really trying to work hand in hand with the South African Reserve Bank, and instead of them having independent, unrelated processes, really bringing it all together in a simplified and strategic way. For people leaving the country, they've now removed financial immigration as a South African reserve process, and they've brought this into a South African revenue services process, where it's essentially now more about giving up your tax residency in South Africa, formally letting them know that you're not tax resident there anymore, opposed to it being a central banking issue for moving funds offshore. So SARS is moving towards modernizing our processes, and hopefully this will get us off the gray listing. So guys, we have one question that's come through so far, and to anyone in the chat, please do feel free to give us more questions. The first one is in layman's terms, if you had to keep it really simple, what is the difference between a CBDC and cash in your account? So if I am an individual, I am the man on the street, I have a CBDC account, and then I also have my fiat currency, traditional money account with the bank. What is the difference there? And secondly, do you think that we're going to be able to get leverage on CBDCs as a individual kind of retail customer? El, your thoughts?
This is brilliant, right? One of the key things that I pointed out between CBDC and fiat money is really programmability. Think about that. For most of us here, maybe you have kids, right? That's one way to think about that. So a lot of times your kids will want to go out and buy sweets, they want to go buy ice cream and stuff like that, but they haven't done their homework, you know. So you could program CBDC in such a way that it is being released to their wallet in the first place, but upon them sort of submitting their homework to the teacher or the school, then the money gets officially released to their wallet for expenses for them to go out and buy ice cream. So that's one key thing that is different from CBDC. Whereas with fiat money, whether you're using bank transfer or using hard cash money, what happens is that you have to personally go validate, you know, whether your kid has completed the homework, see that they have sent it over email or the school portal that have submitted the homework before the funds from your pocket gets transferred to the kid. So I think that lies the key difference, right? In a very simple, without complication way, how programmability in money changes everything, because decision can be made based on principle, based on conditions. You don't have to check them if they're simple enough. And then you save a lot of time and cost doing a manual physical check on those events and activities. So I think that's a key difference between fiat money in your pocket versus programmable CBDC.
Very, very good point. And Shiven, do you have any comments on a retail kind of customer potentially getting leverage on these sort of assets and how that could work?
Yeah, I mean, Al, I really love the example. I think that puts it in the most simplest terms. The programmability is what's the most enticing part about CBDCs in the long term. From a leverage aspect, I think where it really gets interesting is how would the word be used, CBDC and cash, would it be used interchangeably in the next 5 years? Or how would it look? And we take, I'll use an example on the leverage aspect from a Fed's fund rate. And if we look at cash deposits in our account, how can the Fed actually give us deposits in this? And I think, again, it comes down to the programmability and the usability in terms of, yes, CBDCs in the long run would have sort of a function of cash, but on a more widely accepted aspect. And from a leverage point of view, if we're looking at the financial markets, it can be used as collateral exactly like cash, if it's accepted more broadly, sort of programmable tokens in that aspect. So yeah, I think that's my thoughts, and I really love Al's aspect in terms of as simple layman's terms. The programmability is something that would be really important to everyday retail users as well.
Absolutely. So our next chat is actually something that, or next question in the chat is something that is very important into enabling trade in sub-Saharan Africa and Africa as a continent. So essentially the question, and Shiven, I'll pose this to you, how can this technology be used to better enable regional trade and to effectively make trade between African countries more seamless away from the US dollar to alleviate the US dollar liquidity challenges that we do face in Africa? What are your thoughts, Shiven?
Amazing. I mean, if we look at the current state of the world, what's really interesting is that on currently the platform is we have BRICS coming in, and a lot of talk about, Africa needs to be part of BRICS on a stable coin that's part of BRICS nation. But if we look at how this would work is, I mean, I look at China's aspect in the yuan, when even though they moved away from the dollar and regular trade, it was only 3% of the total liquidity in international trade, which was really small compared to how much of power the dollar actually currently has. But from a long-term aspect, smart contracts would I think there was a test with a larger corporate on the commodity side for smart contracts. A test has been done from India, and I know there was one company in South Africa that actually tested the tokenization and smart contracts aspect. Is there's a lot more validity in the transmission of trade, meaning that if my smart contract is a commitment to you, that means that those goods are committed. And I think in banking terms, people would look at it as an LC on the smart contract aspect. But from the interchangeability between a free trade agreement, I think about South Africa across African unions currently, that would be really interesting to see how they accept and how they evolve on the technology aspect. Because yeah, I mean, smart contracts would be the most enticing way to settle this. But CBDCs, long-term aspect, but stable coins, yes, you may see more aspects in terms of stable coins, maybe the USDC, EuroC, Bitcoin, or even Ethereum being settled in sort of the spot rate. But I think there's a lot more regulation that has to go into these smart contracts to think about trade in BTC particularly.
And I mean, as Al said earlier about the smart contracts, that could really take a lot of pressure off of the lender in terms of when the money is going to be paid and delay in payments and source of payments, because it's built into the contract itself, you know, and using that blockchain technology. So that's one way it could perhaps help. And I think there's the next question we've got here kind of leads to what you were alluding to, Shiven. It's more about, you know, what is the adoption rate for this technology across the world, and also what are the challenges that are stopping the adoption from actually happening? You know, obviously I explained earlier about people being hesitant because they simply don't understand what it is, how it works, the benefits thereof. What is there more to it than just that? Al, what are your thoughts?
I think the question is maybe essentially asking about two things, right? One is the adoption of, say, digital payment tokens as well as CBDC or cryptocurrency. And the other aspect is why is adoption rate where it is right now, you know, not high enough, right? Because if it's high enough, pervasive enough, we don't need to have this forum. You and I all will be settling seamlessly through CBDC, and nobody will be talking about why, because it's been done for so long. So the first question, adoption rate in today's society is the fact is the numbers all over the places, right? We know that for sure, just MetaMask alone, over the world, over the globe, we have more than 350 million users of cryptocurrency. And in terms of the numbers of cryptocurrency user, I think that's far more, way higher than that, right? There's no actual count, but if you really think about in a room most of days these days, in a room of 40 people, when I give talks these days, maybe 2 to 3 of them would have exposure to cryptocurrency, dealt with cryptocurrency, or made payment through cryptocurrency before. So that gives you the sense that somewhere around maybe 10 or 20% of the population having dabbled with digital payment token or cryptocurrency. And that is also proven in stats released on the Straits Times in Singapore. About 16% of Singaporeans have dealt with cryptocurrency before, and that was statistics in 2021. Probably much higher now, but I don't think it's any way more than, you know, say 20, 30%. So that's where we are in terms of adoption rate, to answer the question straightforward, around 20% in more advanced economies. The other question about why is it not happening fast enough? Why is it not pervasive enough? Just like any technology or any revolution, it's always about people, about processes, right? There are people who are holding on to incumbent technology, proprietary capabilities, or even just from a authority perspective, does not want these things to move that fast, right? If you think about how banks would handle cross-border payments through CBDC, cryptocurrency, are they ready? Maybe yes for some, but no for most of them. Because they're not set up to do that. Their infrastructure is not ready for that. Is it easy to change that? It is not. It's highly costly because of their existing processes. Just from manpower perspective, all the staff have to retrain to understand how to look at blockchain transaction, where the compliance officer in the past would have been very used to looking at money laundering issues from fiat payment via the SWIFT network, how to spot those, how to spot irregularities, behaviors. Now they have to learn new things, right? They have to learn about cross-bridge swaps. They have to learn about how to read a blockchain scanner. They should learn a lot more things. And these are all retraining costs, staff costs. We haven't even spoken about infrastructure. So there is a lot of impediment to moving things forward. But then what we're doing today between Michael, myself, the chamber, as well as Shivan, is really to explain the benefits, right? If there are no benefits, then why do you invest time and money into doing this? Because the benefits outweigh the costs in the long run. That's the key essential message that we're driving across here. The benefits really outweigh the cost in the short run. So if you are able to look at that, then it makes sense to push this forward in respective community, in your company, around the government that benefits you. These are the messages you got to get across to help people to understand the benefits in the long run. There's so much more with programmable money. I think that's the key message that I want to drive across again and again.
From my perspective, what I'm hearing there is essentially education, and from education, it will drive the right behaviors towards infrastructure development and adoption, mainstream adoption, and we're still a way away from that, I think.
Yeah, Michael, I think for us is on this call is really education and spreading the knowledge. But for a lot of people on the call, they have actual pool, they have actual economic benefits. They can actualize those carrots, and sticks to make people move, right? Whereas our job here is really to help people understand why they need to do that now.
Yeah, you're completely right. Shiven, do you have anything that you'd like to add to that, at the adoption rate and the lack thereof, or the speed of it?
No, agreed. I think Al covered like everything so well, but fundamentally, I mean, that's where we are, and that's the cost benefit to this is the benefits in the long run outweigh what are the current costs, and transitioning from the legacy system and the legacy protocols in current banking to how we look at on-chain analytics, how we look at money laundering through different wallets. And I mean, there have been tons of scams, over $42 million plus in terms of scams. But how do we look at that? Where is that money moving? How is that money moving? I think being trained and education is such an important aspect of it. And it's coming through the system. Where we're not seeing it is, as a retail person on the street or a junior officer in a bank may not see what is happening from the top down. And what's currently happening are those senior positions and those senior staff are actually being trained to understand the fundamentals of this greater adoption in terms of where the banks are moving to, where the central bank's moving to, where different countries are moving to. So the adoption rate in South Africa particularly is slow, but we have seen more enticing opportunity in the market. I think there's also the mentality of cryptocurrency makes you 10x within a month. And I think that's what's growing the adoption of the uneducated investor. But whereas the guys that are willing to put in the effort in terms of how they learn equity to learn crypto is you've seen this greater adoption in, okay, I want to invest in crypto. I want to buy some Bitcoin. I had an interesting conversation with a dad the other day, and he was like, you guys run an OTC. My kid keeps talking about this NFT collection and he needs to buy some Ethereum. How do I do this? And, he's normally used to buying some dollars or buying some euros and funding and, buying his child this aspect. And what was really interesting is talking him through this process of, this is how you set up your wallet. This is how you buy some Ethereum. This is how you buy some dollars. And you know what? He left that conversation understanding an entirely new different world compared to where traditional banking is. And I think that's where we are currently, and that's where we set up these webinars and we set up these conversations, and people can reach out to us and talk to us about, what are their concerns, how can we help them, how can we assist them in growing and improving their knowledge. And I think from Al's perspective, from my perspective, we're always willing to share this knowledge. So adoption rates are growing, and I think currently very limited, but it's growing. And I think that's where we want to be, front facing, educating our population that, what, your kid is eventually going to ask you for an NFT. And an interesting conversation moving over into the tourism industry. I was in the Karoo a little while ago, and I had a chat with this old lady, and it was really incredible to see that she asked, what is an NFT? And you can see that adoption is growing, but how to get there, and that's where it's really important. So yeah, growing, but we're there to provide that assistance to help them grow. Back to you, Mikey.
Thanks, man. And I think, guys, we'll leave it there. We've come up on the hour here. So everyone, as Shiven and Al have been saying all day here, they're really available to speak with you, to kind of engage with you, to share their knowledge with you, their expertise. Please do connect with them. You can find them on LinkedIn. You're able to communicate with them directly. This is what the Chamber aims to do. So we will be sending out kind of a follow-up email after this webinar. And in there will be Al's contact details and Shiven's contact details. Please do connect with them to discuss further on these topics and collaborate. Perhaps there's opportunity for you guys to be found. You will never know unless you ask. So feel free to ask. And just to finish off here today for us, everyone, thank you for staying on the call and sharing your questions. Look for us on the internet, South African Chamber of Commerce Singapore. Our website is simply sacham.sg. And today's webinar has really been brought to you by 88, who's one of our members, and the Unique Speakers Bureau in Singapore. The Unique Speakers Bureau is a new business that has been set up recently by a South African guy in Singapore named Llewellyn Vance. And he's really trying to make an impact in the speakers space. If you're hosting an event and you're looking for someone to be a speaker, if you want team building, if you want a panel discussion, a fireside chat, and you're looking for a person who's knowledgeable of a particular industry, reach out to your Unique Speakers Bureau and get in touch with them. Equally, if you're looking for treasury solutions in South Africa and cross-border payments all over the world, get in touch with Shiven at 88. And if you have any questions about the membership of the Chamber and how that works, please do reply to the email we're going to send you. Our Executive Director, Kerry Den, will be in touch with you and should be happy to have a call with you to tell you more. So everyone, thank you very much for your time. El, thank you very much for dialing in from Laos. I appreciate it. Shiven, yourself from Johannesburg, thank you so much. And I hope you guys have a fantastic day further. Thank you, everyone.